Hey everyone, welcome to a very special episode of Real Estate Talk. Today I have Hanaa Wahba, who also is my mother for the three people out there that don't know. And we're going to be talking about insurance and how it, everything related insurance and real estate. So how they are interrelated and what you should do when you're shopping for insurance for whether you're buying a new home or you just want to update your policy and see if there's something better for you out there. So, Mama.
Hi, Kareem. Thank you for hosting this. I'm so happy to be with you on this episode. Looking forward to explain more about insurance and how insurance and real estate work hand in hand.
Perfect. So let's get started.
And hi, Kareem. Thank you for hosting this.
Sorry,
I'm so happy to be with you on this episode. Looking forward to explain more about insurance, how insurance and real estate work hand in hand.
So if anyone has any questions, as always, please feel free to go ahead and ask. We'll be checking the chat or the comments, and we'll address questions as they come. But let's get started with very basic, and then we'll go into a bit more detail. So just explain to everyone, what does a typical homeowner's policy cover?
Good question. This is like basics, and everybody needs to know that homeowner's policy covers them against fire, against wind and hail, against liability issues, against theft, against water damage. So all this is covered under the basic homeowner's policy. Whether the homeowner's policy be for a single family home or a condo, a townhouse, these are all components of the homeowner's policy.
Okay, so what does it also not cover?
Okay, so there are many fine details. And the homeowner's policy needs to be tailored to exactly the property where you live. So your personal property would differ from one policy to the other and would differ in details. So jewelry needs a floater. If you have carpets that are handmade and are very precious, say Persian carpets, these are things that need to be added. So there are things that don't come automatically built in the policy, but then they can be added to the policy.
Okay, sounds good. So also personal belongings need to be added according to what their value is and how much they are, correct?
There are personal belongings built in every policy, but there are special personal belongings that are not covered unless they're specifically appraised and added.
Perfect. So moving from there, this is also a pretty important question. What's the difference in with insurance policies if it's a condo or a single family residence? Would that matter? The prices, what they cover, and so on?
This is such a good question and very important because people get confused, especially first-time home buyers, and I get quotes from people who show me what they got and they don't even have the right type of policy. So a single family home is a policy, and there are different tiers within the single family home, but it's a policy that covers the building and the inside. A condo or a townhouse typically covers the inside, is only responsible for the inside. The four walls and the roof are covered by the master policy of the homeowners association. So then there is a big difference.
Of their HOA fees, some of that fee is allocated to the policy that you're talking about.
Right. So you don't want people to pay for a single family home when they have a condo or a townhouse, because this means they're paying more and they're paying twice, and they will not make use of it. Okay.
Something they don't need. Okay. Very good. All right. So Let's also, before we go into claims and that side of insurance, what should people be looking for when they are shopping for insurance? Let's say someone's in escrow. You will always need a homeowner's policy, insurance policy, if you have a lender, because they require it. That's by law. And if you don't have it, they will get you one. Most likely it's overpriced and you will have to pay for it. So you are going to need it. It's not an option. This is required. And if you're buying cash, obviously highly recommended that you get insurance. So anyone is going to be looking for insurance during the time that they're in escrow. What should they be looking for? If they're comparing different companies, if they're comparing different policies, what should they look for?
I love this question because basically when people look at the insurance quote, they go straight to the bottom right-hand corner. How much? What's the price? So this is how most people evaluate insurance. They look at the premium. Okay, this one sounds good. This one is too much. This one is too little. And sometimes, to be honest, lenders ask for a particular amount of insurance because the loan is kind of tight. So they want a certain amount of insurance only. So these are things that people look at the premium. However, there are things to look at, and I'm glad to have the opportunity to explain this to everyone out there. One important thing is the dwelling. The dwelling is the cost of replacing that property in case of a big claim like fire. So this dwelling cost is estimated. It has nothing to do with the price of the property, because see, the property has also the location, the land. There are other features,
correct,
that are not covered. So $1 million house, for example, could only be replaced at $500,000, but the other value is other things to the house. So the dwelling evaluation is very important. You don't want to be under evaluated or over evaluated. So in cases of over insurance, you're not going to be paid the over. What happened to the people in Paradise who lost their homes? So they were asked by insurance companies to go out there and look for contractors and get estimates and then start the work. And insurance companies keep funding as they go along, and until they reach the cap and they go, that's it, or until the house is completed. So you don't want to be under that where they say that's it and you have not finished. You don't want to be over that and paying for something unnecessary and then you don't need it. So that's very important. How we at Farmers do the evaluation is we have a computer system that does what is called a replacement cost estimator. So they go over every item in the house. Now, sometimes in cases like Paradise, when there is a surge and there is demand for construction, the construction becomes higher because of demand. And in Farmers, we have a cushion that is built within the policy, and it could be up to 25% of the dwelling amount, in addition to 10% for ordinance and law for the permits and city fees, in addition to 10% also of the dwelling amount for the other structures like the garage, the fence, the gazebo, things that people have in their homes and they don't want to. I don't want to keep talking, but there is so much in those. Dwelling is so important. You want to check dwelling? Sorry.
You make sure you're getting the same. If you're comparing two quotes, two companies, you make sure you're getting the same coverage on each one, because otherwise one policy could be more expensive than the other just based on the coverage. Deductible is another big one, right?
Right. So the dwelling is like kind of the foundation. Everything is a percentage of the dwelling. And then the deductible is also very important. I sometimes see people putting like, like there's a hidden deductible in the policy. Up to, I see percentages of the dwelling going up to $20,000. You don't want to have that on your policy. You don't want to have $500 also. Maybe $1,000, $1,500, $2,000 maximum, like what you can afford, what you are able to pay, because you want to save the big dollars for the insurance company to pay. You just pay the small dollars.
And just for clarification, deductible is the percent or the amount that if I'm filing a claim, have to pay out of pocket before the insurance starts covering anything above that, correct?
Right, correct.
Okay. So if it's a $10,000 claim and I have a $10,000 deductible, they pay nothing. But if I have a $1,000 deductible, they would pay the remaining $9,000.
Exactly.
Okay.
I had very recently, I had a consultation with a realtor, interesting enough, who had a client who bought a condo with a $10,000 deductible. And then they had a claim. And, there was nothing to be done really, because the claim was going to be somewhere around 12 or 13,000, all the estimates they got. So it was not well worth making the claim. They already had to pay 10,000 out of pocket.
So that leads me to the next question. When should someone file a claim or not file a claim?
All right. So insurance is for filing claims. Insurance is there because you don't want to be paying out of pocket. If you have the right coverage, if you have the right insurance policy, you would want to file a claim. It's like a car accident. You want to file a claim when you have one. However, so don't waste the claims on tiny, minor issues. So, I had a client recently who just moved into a home and then they had a water damage. Now, if the water damage was, tens of thousands of dollars, that was well worth filing a claim. However, if it is like a couple of $1,000s, you don't want to have a claim on the property. Now, this is important because claims stay on the property, stay with the property, and then you don't want to have a claim on the property just for a couple $1,000s.
For how long?
Well, for 3 years they show, but they even show in the history of the property. Like for 3 years, they have to be disclosed, but they show on the history of the property. Sometimes, when we were buying our house, we went to, Karim is my realtor, and he took us to a place that was so beautiful in Irvine. And then I just fell in love with the place, but then I checked and they had claims and nobody would take that.
They had 2 or 3, something like that?
Yes, they had 3 claims. They had 3 water claims. And like companies didn't want to do that.
Correct. So this is something I want to kind of point out, because it's not automatic that claims means run away from the house. Lots and lots and lots of homes have claims. Water claims are more, they happen more than we would probably want them. So it becomes an issue if, like Hanaa was saying, it's a recurring thing that happens. I think that property had 3 claims in the past 4 or 5 years. That becomes a huge red flag for insurance companies, and getting insurance for a property like that becomes a lot more difficult. Whereas if you have 1 claim and you take care of the issue, and that's that, it's not from a resale standpoint, from a if you're buying a place that has something like that, 1 claim, not an issue. So many places have it. So you don't want to not use your insurance, you don't want to pay all of it out of pocket just to avoid that claim, you can use it as long as it's worth it. It's not $1,000 or $2,000, because in that case, you might as well just do it yourself, not have it on your record. You'll still have to disclose it if you're selling, but it won't affect the buyer's insurance.
No, it doesn't affect the buyer. And one important thing is take the next step, go to the underwriter. So let your agent speak to the underwriter and negotiate. If you are a new homeowner, like the claim was for the past owner and it's one claim or two claims, it's negotiable. When it gets over two claims within the last 5 years, it gets tough.
Okay, perfect. So speaking of claims, someone has a claim, what do they do?
All right, so the first thing is you have to do two things. One is call your insurance agent, because they will be your best friend. They want you protected. They sold that policy to you because they knew this was good for you according to what you had discussed together. So they want to help you. And the second thing, and they will help you file a claim with the company. They will walk you through the procedures and so on. And number two, start taking all the steps to limit the damage. Do all the right things to contain the damage. Do not let the damage go way out of hand. Just be responsible, do the right things. Remove your personal belongings from this wet area. Try to dry the floor somehow. Call a company for remediation. Whatever you need to do, just do.
Take pictures, document.
That's for sure. Every step will be with pictures, but and even when you are taking pictures, thank you for saying that. That's a great idea. Yes, great idea. Pictures, but even with taking pictures, do more. I mean, pictures are passive, but good, but active also to stop the water. If you need to shut off the water, do that.
Okay, perfect.
And by the way, there are now there are things now that you can use in your home that alerts you to whether there is a leak at home. So you don't have to get into all the heartache of having a leak, a bad leak.
Correct. Now, I do want to say something before we continue. I always, for the most part, when buyers are in escrow, we always tell them you will need insurance at this point. We give them Hanaa's information. They check if Farmers is a good fit for them or not. And more than anything, I do it out of, because I know she educates them. She doesn't push anyone to buy or do anything that they don't necessarily want or need. So use her as a resource, even if you're not buying. If you have a house and you just want to review your coverage, go ahead and feel free to reach out to her, because she will help without pushing you one way or another. But I will say this because she won't, and I know she won't. Not all insurance companies are the same. And this is not a pitch for Farmers. It's really not. And I'm not saying Farmers is the only good company. There are other very good companies. But not all insurance companies are the same. And I know this because I've dealt with clients that had different companies, and I can think of one situation in specific where it took the company, before they actually gave the client or the homeowner the amount that they needed to repair the damage that was done, it took them about 8 months. Now that client was not living in the house, so that was okay because they were living in somewhere different. It was just a vacation home that they had, so they didn't go to their vacation home, but that's fine. Now, imagine if you had to wait 8 months, 3, 4, 5, it doesn't matter. It could be an extreme scenario, but even if it's any number of months in your house that is damaged and you're unable to proceed with work because you still didn't get money from your insurance company. Now, some insurance companies will lowball, let's say, for example, some damage is done in the floors and they'll say, oh, you don't need to change the floors, you can just do something, whatever. I don't want to get into too many details, but I'm just saying not all insurance companies are the same. So with that being said, how do they know if they are with a good insurance company or not?
Thank you, Karim, for all this. And yes, I would love to help anyone out there who want to know what they're covered for and what they're not covered for. I can help you read your policy. And I would be very happy to do it. Also, I want to say, I hope you don't have a claim, but if you do have a claim, you really want to be with farmers. And I have seen it happen so many times with my clients. We file the claim, and then maybe 3 days later or 2 days after filing the claim, the adjuster would go and assess the situation. The adjuster has all the rights to take the measurements, make the estimation, and then he takes the bank account of number of the homeowners. Within 48 hours, money gets into their account. No matter how big or how small, they start step by step, sometimes the full amount, sometimes it's part, depending on the stages. Also, insurance pays for renting a place or taking them to a hotel, putting the dogs in the kennels, paying for meals. There are lots of other things that are hidden within the insurance policy. You might think you got it all, but this is also the help of your agent. The agent tells you this is what you can ask for because this is covered in your policy. You might need this or that. So they help you understand, and they walk you through the process. So that's very, very important. Now, how do you assess a company? Apart from the fact that there is rating online, I think your relationship with your agent matters most, because then your agent can explain things to you, can walk you through the details, can explain what happens in this situation, not hypothetical situations, but just generally they would explain to you what would happen, what's basically covered, what's not covered, and in the event, they would be there for you. You don't want an 800 number at that time. That's the last thing you want. You don't want an 800 number. You don't want to stay on the phone. You don't want to explain to every assistant you speak to and every agent you speak to the story from the very beginning, what happened, where you are now, what's going to go, how it's going to go next, and so on and so forth.
Okay. So before I go to my next question, Sarah just asked the question, how can you give us examples of personal belongings that are automatically covered in a homeowner's
in a policy? All right, so it depends. There are 3 tiers, as I told you, within farmers for homeowners policy. But generally, the policy that I always recommend has all your furniture covered, all your clothes covered, all the beddings and the sheets and whatever have you are covered. And it covers cash to a certain amount of money, that $2,000. It covers jewelry up to $2,000. It covers weapons up to $5,000. It covers rugs up to. So these are the special things are covered up to a certain number, but all furniture. Now, it's a good idea to take pictures of your home. It's a good idea to take pictures of your upgrades, because it's a good idea to have pictures of everything. You want to show, the adjuster what you had, and they would be very happy to help you replace all this. One important thing also, you want to have a policy that offers replacement and not actual cash value. So actual cash value means an item minus depreciation. So if the item was $1,000 when you bought it, but over 2 years it has depreciated. Okay, and there is a schedule for depreciation and so on. But replacement means getting the same item, even if it costs more.
All right, sounds good. So, a couple of final questions, and this is more on investment property. So if someone has an investment property, is the policy different than one they would have for the regular primary residence?
Good question. Yes, each policy is different from the other. Investment properties are different. If it's a rental, then it's different. If it is vacant, that's also another policy. If it's going to be renovated, that's a third policy. So it all depends on what kind of policy. Now, you don't want to have a claim with the wrong policy, because when you have a claim with the wrong type of policy, this is called misrepresentation, and the insurance company has the right to decline. If I said that this is an owner occupied and then there's a claim and they discover that's a vacant property. Now, vacant properties cost more to insure than an owner's occupied policy. But so the client has been paying less, but the client was not properly covered. So you see, like, these things are very important. It's important to understand what type of property, and it's important to understand the risks, and therefore get the right kind of policy.
Okay, perfect. And finally, if someone is renting, or so if they're the tenant, or if a landlord has an investment property, should they require or should that tenant have renter's insurance?
It's always recommended. It's very, very highly recommended to have renter's insurance. Some landlords, unfortunately, do not require renter's insurance. And then when the property, for example, is the things are stolen from the property, if there's a theft, well, this poor tenant is not going to have anything, and the landlord cannot help him. So for the tenant's welfare, for his, for his best interest, he should have it. Also, if something happens to the property, there is the liability that covers the landlord, and therefore the landlord would also be covered. Now, for every one of us, whether it be a landlord, whether it be a tenant, whether it be a homeowner, your personal belongings that are in your vehicle that could be stolen out of your vehicle are covered by your homeowner's policy. So say you have your computer and tablet in your vehicle, they are part of your homeowner's policy because they're part of your personal belongings. So you want to make sure you have a renter's policy, you have a landlord policy, you have a homeowner's policy, you have the right policy for the right coverage.
Sounds good. I don't see that we have any more questions, so closing comments or thoughts?
Kareem, thank you for this time. It's great to be out here with you. I am so proud of you, proud of your success. Very grateful that the hand of God is on you and on your family and your business. And I love your integrity at work, and I'm so proud of everything you're doing. And thank you for hosting this event. And I would be very happy to answer any questions at any time. Kareem's clients are the best clients. They can call me and just ask for consultations. I would be more than happy to respond. Thank you.
All right, perfect. So yeah, thank you. Likewise, of course. And as I said in the middle, if anyone wants to reach out to Hanaa, if you someone came to say hi.
Hello.
Hi.
I see you.
Yeah,
I see you.
If anyone wants to reach out just to review their coverage, see if they have anything that they need to include or exclude out of their policy. No, just come. We'll link up her information and or just contact us and we'll happily connect you. She's done it for so many people and they're always grateful for that. So again, thank you very much. I hope everyone had got some value out of this. Come. Okay. I hope everyone got value out of it. And if we can help you in any way, whether it's insurance, real estate, we'd love to be of value to you. Have a good day, everyone, and we'll see you soon.
Thank you.
Thank you.
Okay.